If you've been following XRP for a while, you've probably heard the rumors that there might be two different values for XRP, one that the public sees and one that operates behind the scenes privately within institutional systems. Some call it a conspiracy, others call it the truth hidden in plain sight. But when you start connecting the dots between Ripple's partnerships, institutional testing, and the architecture of global finance, things start to look far more complex and far more interesting. This is Crypto Equation, and today we're uncovering the reality behind one of the most debated ideas in the XRP community, the theory of a public price and a private system, because understanding this distinction could be the key to understanding XRP's true value and its future role in global finance. Let's get into it. Before we go deep, let's start with the basics. XRP is not just another cryptocurrency. It was never built for retail speculation or meme coin hype. It was designed to solve one of the biggest inefficiencies in global finance, the movement of value. Every day, trillions of dollars move across borders through a system that hasn't fundamentally changed in decades. Slow, expensive, outdated. That system is called SWIFT. It relies on correspondent banks, manual verification, and pre-funded accounts that tie up liquidity around the world. Ripple's vision, using XRP, was to replace that friction with speed, automation, and efficiency. But in doing so, it created something deeper, a technology that could bridge public markets and private financial systems. And that's where our story begins. When we say public price, we mean the XRP you and I can see and trade on exchanges like Binance, Coinbase, and Kraken. It's the open market, driven by speculation, supply and demand, and investor emotion. But the private system refers to something entirely different. It's the network of institutions, banks, liquidity providers, and central banks that use RippleNet and on-demand liquidity to settle transactions. These systems don't function like public exchanges. They operate on locked liquidity corridors, bilateral arrangements that determine internal pricing. In other words, the public price might be $3, but the settlement value of XRP inside certain institutional systems could theoretically differ, not because of manipulation, but because of function. Private systems value liquidity differently. They calculate cost efficiency, volatility risk, and settlement time, not speculation. And that's what most investors don't realize. Let's look at an example. Imagine a major global bank, say a central bank in Asia, wants to transfer $10 billion across borders instantly. Doing this through traditional systems would take days and cost millions in fees. But using Ripple's technology, that can happen in seconds with minimal cost. Now, to move that kind of money, the institution needs enough XRP liquidity. They might source it through private pools, prearranged corridors that don't rely on public exchange prices. Why? Because institutional systems can't risk volatility or low liquidity depth. They set their own fixed settlement ratios internally, often locked for specific periods. That's why the private pricing or valuation of XRP for institutional use might not reflect what we see in the public market. This doesn't mean there are literally two coins. It means there are two ecosystems, one speculative, one functional. And that distinction could explain why XRP's public price remains low, despite massive institutional traction behind the scenes. Now let's address the elephant in the room, the 2XRP theory. It's been a hot topic for years. Some claim that private institutions will eventually have access to a separate XRP ledger, or even a private XRP price at much higher valuations, potentially thousands of dollars per coin, reserved for high-level financial settlement. So is there truth to that? The honest answer is partially. There is one XRP ledger. It's open source and public. However, Ripple has also built private versions of the ledger, customized for central banks and institutions testing CBDCs. These are not duplicates of XRP. They're private deployments of the same technology, allowing sovereign control while maintaining interoperability with the main network. This means central banks could, in theory, use Ripple's technology for their own currencies and still connect to the main XRP ecosystem when needed. That's where the private system conversation becomes real. It's not about secret prices. It's about parallel financial infrastructures using the same foundation. Public XRP provides liquidity. Private systems use that liquidity, but with customized rules, limits, and exchange rates. That's the quiet revolution happening right now. If you zoom out, the pattern becomes clear. Ripple has signed partnerships with more than 300 financial institutions across 40 countries. Some of these partners are small fintechs, but others are major players. Santander, SBI, Bank of America, the Monetary Authority of Singapore, and several central banks exploring digital currencies. These institutions aren't trading XRP on Coinbase. They're integrating RippleNet, and in many cases, building private settlement rails that connect to the XRP ledger only at the bridge points. That's where settlement happens. That's where value moves, and that's the layer most of the public never sees. So when people look at XRP's price and say nothing's happening, they're only looking at the visible surface, not the infrastructure underneath. The public price is the tip of the iceberg. The private system is the structure below the waterline, and that's where the real transformation is taking place. Let's look at what drives these private valuations. Inside Ripple's on-demand liquidity corridors, the value of XRP is determined by several key variables: transaction volume, liquidity availability, volatility buffers, and risk exposure. That means if an institution is moving $1 billion, they might value XRP differently than a retail trader moving a few hundred. It's a matter of scale, stability, and execution cost. In financial systems, price and value are not the same thing. Price is what the market pays. Value is what the system gains. So while the market debates whether XRP will go to $5 or $10, institutions are already using it to save millions in settlement costs. That's real value, even if the public price hasn't caught up yet. Here's where things get even more interesting. There's growing speculation that as XRP adoption scales, the gap between public and private valuation models could eventually close, meaning the public price could revalue sharply upward to reflect its systemic utility. Think about it. As more financial corridors rely on XRP liquidity, demand rises. As demand rises and circulating supply tightens, because institutions lock liquidity for settlement, the public market begins to feel that supply shock. This is how revaluations happen. Not suddenly, but structurally. It's not about a secret private price. It's about liquidity migration. The more XRP that moves from speculative exchanges into institutional usage, the scarcer it becomes in public circulation, and the higher its open market value goes. That's the mechanism that could drive XRP's long-term price discovery. Now let's talk about central banks, the most private systems on Earth. Many central banks are testing CBDCs, central bank digital currencies, and a key issue they face is interoperability. Each nation wants its own system. But how do you connect those systems for cross-border settlement? That's where Ripple's private ledger technology comes in. Ripple offers a customizable version of its ledger for central banks, one that uses the same core codebase as XRP but allows national control. That means a country can issue its own digital currency while still connecting globally through the XRP bridge when needed. In that context, XRP becomes the neutral asset between sovereign currencies, the connective tissue of digital value. That's the private layer the public isn't part of, but benefits from indirectly. When those systems go live at scale, the liquidity flowing through XRP could multiply far beyond today's visible trading volume. And that's where the real value sits, hidden in plain sight. Now let's address another key element, transparency. Many critics argue that Ripple keeps too much behind closed doors, that partnerships, corridor volumes, and liquidity data are opaque. But think about it from a regulatory standpoint. If Ripple's clients include banks and government institutions, those agreements are governed by confidentiality and compliance. They're not meant for public disclosure, at least not until full rollout. That's why most of what's truly happening with XRP happens quietly. By the time the public sees it, it's already implemented. This is how institutional technology adoption works. Silently, systematically, until it's suddenly everywhere. And when it reaches that point, the public market usually reacts too late. That's why being early and informed is so important. Let's put this into perspective with some numbers. Ripple has said it aims to capture a small percentage of the global payments market. Even 1% of that market represents trillions of dollars per year. If XRP becomes the preferred bridge asset for even a fraction of that volume, the liquidity demand could easily justify valuations far beyond current levels. And here's where the public-private concept becomes critical again. Institutional corridors don't buy XRP on retail exchanges. They source it through liquidity providers, many of whom accumulate directly from Ripple's escrow or institutional sales. That means large portions of XRP supply never even touch the public market. So while retail investors trade small amounts back and forth, institutions are moving unseen volumes, locked in private networks. Over time, as those networks expand, more XRP leaves circulation, creating scarcity in public markets. That's the quiet mechanism that could one day reprice XRP dramatically upward. Now, let's connect this to the bigger financial picture. The world is heading toward tokenization. Every major institution, BlackRock, JP Morgan, Goldman Sachs, is now investing in tokenized assets. They're digitizing real-world value, stocks, bonds, real estate, commodities. And to trade those assets globally, they need interoperable settlement rails. Guess what fits that exact role? XRP. Ripple's ledger supports not just payments, but tokenization and smart contracts through its new EVM-compatible sidechain. That means in the coming decade, XRP could power both institutional settlement and asset tokenization. And that's where the private and public worlds finally collide. Institutions will use private systems for efficiency. The public will trade tokens and assets built on the same rails. Different layers, same core network. That's the evolution Ripple envisioned from the start. So what's the real XRP value? It's not just the number on your exchange screen. It's the total impact of XRP's liquidity across both public and private systems. The public price reflects speculation. The private system reflects function. And over time, as adoption scales, those two worlds converge. That's how real value emerges. Not from hype, but from use. We're still early in that convergence. But every new partnership, every central bank pilot, every corridor expansion brings those two layers closer together. When they meet, the price we see will finally start to reflect what XRP has been all along, a bridge asset for the world's value. So, is there a public XRP and a private XRP? Not exactly. There's one XRP, but two worlds using it differently. One world trades it, the other relies on it. And when those worlds finally overlap, we won't be asking what XRP's price could be, we'll be realizing what it's already become. This is the phase of quiet accumulation, silent adoption, and preparation. The phase most people ignore until it's too late. If you're paying attention now, you're early. And being early in a transition this big is the closest thing to opportunity you'll ever get. If this video helped you see XRP from a new perspective, make sure to subscribe to Crypto Equation, where we decode crypto, finance, and innovation with clarity and depth. Comment below what you think. Will the public and private XRP systems eventually merge, or will they stay separate? Your insight matters because we're all living through one of the biggest shifts in financial history. This is Crypto Equation, and I'll see you in the next one.